all-round correction in items which have exactly posed pressures in the month of November.
I have a question for you actually on services, which always worries me. It appears that the services inflation is not as alarming as it appeared to be last month when you compared it to September and August. For instance, health, which was at 5.34%, has gone up by only 5.31%. So while it's 3 basis points is not saying much, at least the upward trajectory in health services appears to have been arrested. Education continues to tick higher, 6.13 compared to 5.98, I think, in the previous month. And miscellaneous generally, 3.5 last month. In November, it rises to 3.78. That's a 30 basis point jump. Would you worry?
Well, I think within miscellaneous, we have to be careful because, as you said, health is remaining sticky. Education is remaining sticky at slightly higher level. Health has remained moved sideways. But I think miscellaneous may have been also subdued because of some of the transportation of fuel components as well in that. So probably this month's print is also reflecting the miscellaneous basket, is reflecting the subdued fuel prices, which have, seen a fair amount of correction over the last 1 or 2 months. But yes, services inflation, barring the fuel component, I think will be, watched for, as even the governor had mentioned in the monetary policy statement. I think these are the two services which have not really shown any credible signs of correction in terms of momentum.
All right. I just want to bring another angle to the notice of both of you, in fact all of you, Siddharth, Jayesh and Shubhda. There is an accentuated inflation coming in from the state of from the southern states. Andhra Pradesh has a combined inflation of 8.83%. Telangana has 6.3% and Tamil Nadu has 6.46%. Among the other states that have shown high inflation, it is only probably Odisha and Chhattisgarh that is high. But do you think that cyclonic conditions in the states of Tamil Nadu and Andhra Pradesh have probably had an upward bias to the numbers, and maybe we will have to wait for a couple of months to normalize the numbers? Shubhda?
I think it would be difficult to, extend the weather-related factors or immediately having caused the price pressures in the southern states. But yes, that is something which can be worth explored for. I think my sense is looking at Andhra Pradesh, Telangana and Madras, Tamil Nadu, what I believe is that probably some of the food items may have seen a sharper dislocation. And also we have typically seen that items like pan, tobacco and intoxicants, which I just mentioned has seen a significantly higher jump as compared to the typical seasonality that we see in November. Probably we can, trace some of the roots in the southern states also.
Fair point. That's up actually 9.8%. I just wanted to get Jayesh. And Jayesh, you said that this will be a good number for the bond markets. But they will. Why would you say it's a good number? And what will be the impact on the markets itself? Tomorrow, will they have any scope to cheer?
Yeah, I think we might see some of the sell-off which happened, unless globally something does not happen dramatically. Some of the sell-off which happened today because of the inflation, because there was some fear, even though the consensus was something like 5.4, there was some fear that we would actually see more than 560, 580, right?
Okay.
So from that perspective, and secondly, even for 5.41, the major chunk is food, which should be ignored, right? So from that perspective, it should be okay for the bond.
Okay, but will they react, or is it that, fears of the junk bond market in the US, as well as fears of some walking out of funds if the Fed were to hike, will all these keep bonds a little sobered tomorrow as well?
That's the thing. So at the most, if nothing happens, nothing new happens today over Friday, then to that extent, we may recoup some of the losses today. But as I said, all these events are right now minor till the Fed event happens, particularly the tone, right? So I think that everybody's waiting for the tone of the Fed.
All right. Well, Siddharth, now let me come to you, the RBI's fan chart. We are now at 5.4 in December. It clearly looks like the RBI's target of 5.8 for January, and generally between 5.8 and 6 for the Jan-March quarter is going to be undershot.
Yes, broadly we think that by the end of this financial year we can be closer to 5.5%, and in that case, yes. First of all, it's a lower number compared to RBI's Q1 2016 target, and eventually going ahead, given that demand side pressures from the global markets are still very soft, we don't really expect any major pressure in inflation numbers going ahead in FY17. Also, our number is in low 5% handle on an average for FY17. So that in a way should open up a little more space in our view eventually to the RBI.
Okay, so what space do you see for rate cuts? You said, Siddharth, in 2016?
Our baseline scenario is 2 cuts of 25 basis point each in the first half of 2016 calendar year.
Post-budget, pre-budget?
Our baseline scenario is post-budget, but we need to see how things pan out because RBI stance is always data dependent. But as of now, our baseline scenario is post-budget.
Shubda, same question to you.
Yes, I think, we are seeing an undershooting of the inflation, particularly for January, by almost 50 basis points. And this December number, though it was slightly upside compared to what we had, poses no risk to our annual average inflation for the current year at 5.1. Going forward, I think we also have a similar handle to CPI inflation into the next fiscal year, close to hovering around 5. As far as all of these implying into rate action going forward, our base case is definitely 25, which we believe would be post-budget. The next 25, we are putting it as contingent to how the longer agenda of government action in various spheres, be it on infrastructure, in other space of reform, etc., play out. But 25, we are penciling in after the budget. So if I were to put a first half scenario, it would be 25 to 50 basis points, of which 25 we are more certain of.
All right.